Right. Once again, good morning. Right. Good morning to everyone. Right. So we'll start the session today. Ship finance and insurance. We discussed about that in the last class also. So up to unit 3, we started actually. So today we'll complete the unit 3, unit 4, and unit 5. Right. So the remaining part we'll discuss today in unit 3. I will share the PPT also for you people. You can able to see the PPT?
Yes, sir.
Okay, right. Am I audible? No? Am I audible, right? My voice is clear for you? Yeah. If any voice low and everything, just inform me, right? Okay. So in the last session, we unit 3, we discussed about sales and purchase of ships. Actually, it's called as it's called as a S&P. Okay, sales and purchase of ships. So normally the term used in shipping industry or anything, shipping companies, they're normally told as S&P. Okay, sales and purchase. So next thing is standard security in ship finance transactions. What are the standard securities that should be followed and everything? Traditionally, the shipping banker was happy if you had a loan of say 60% of the value of the vessel. Normally, yes, normally 60% of the vessel, the loan will be given for the purchase of ships and everything. Normally, the banker will be happy, right? The shipping banker was happy if you had a loan of, say, 60% of the value of the vessel. The exact percentage depending on the type of vessel and the likely market on a forced sale, secured by first mortgage together with the usual collateral assignment. Hello? Yeah, of the vessels, insurance and earnings. So normally this finance transactions, you know that it's a higher cost. I shown the previous slide also in the last session, how much million it will happen, everything, right? So definitely we need money from the bankers and everything. So 60% normally that will be an ideal thing. When the late 1970s arrived, and with them the realization that shipping was laboring under sea overcapacity, ship values fell in many cases quite dramatically. Many banks with a comfortable 60% mortgages suddenly found that even if they were to enforce the mortgage and sell, their only market was to the scrap merchants. While a loan of 60% of the value of a profitably trading ship was fine, a loan of 200% of the value of the pile of rusting scrap metal means that homemaker bankers and some hard talking to do their internal and external regulators. So see that that scrap merchants also call us demolition of dynamic markets actually. Okay, so many bankers with a comfortable 60% mortgages suddenly found that even if they were to enforce the mortgage and sell the ship, their only market was the scrap merchants. So some of the problems and everything stand right. Yeah. Next, the following are the principal types of security of which a bank will look in ship-based transactions. A first priority, mortgage over the ship or ships are concerned, an assignment of all the insurances of the ship, an assignment of all the earnings of the ship, possibly including a specific assignment of a particular charter party, an assignment of any requisition compensation of the ship, a personal or parent company guarantee and indemnity, a charge over or pledge of the shares of the borrower, used frequently but not invariably, and some form of security over either cash deposit and or earnings and retention accounts. Again, used frequently but not invariably. See this? These are the following principal types of security for which a bank will look at the ship-based transactions. So various assignments we discuss here, how it happens and everything. So one of the important question, what are the various principal types of security? So you can write this answer in the examination also. Yeah. So a charge over or pledge of the shares of the borrower. So that will be used frequently. And some form of security over either a cash deposit and or earnings and retention accounts. So various things banks will follow, right? Next one. I'll move to next slide here. The fear of banks taking too much security is a more recent phenomenon. See that security also become a fear of banks. Concern has been expressed in the United States that lending banks could make themselves liable under the Oil Pollution Act 1990 and other environmental legislations. See, these are the thing. Taking too much of security is also more recent phenomenon. The fear of banks. So these are the security will be taken here, but the fear also happened there. Anything happens, so right. Okay. So Oil Pollution Act 1990 plays an important role, and other environmental, a lot of environmental acts and legislations also will be there. Yeah, the risk is at the moment they wish to exercise the option. The cooperation of the borrower and the shareholders may not be forthcoming. Ultimately, is a balance between taking the security at the start of the transaction. Yes, before starting the transaction, we should take the security where there is a slight risk that the bank could be deemed an operator in relation to the liability issues, or taking the risk that the pledge may not be granted or requested. Secondly, banks that take out mortgages additional perils pollution insurance MAP. It's called as mortgages additional perils MAP. It's called as MAP. In the event of an insured event happening, to be hampered in establishing their net loss if they have a wide range of security to realize or need to convince an independent lawyer that realization is not commercially practicable. The message for lending banks must be considered whether it is realistically expects in a default situation to have a relay on every item or security that takes. So uh, MAP mortgage is additional perils pollution insurance also taken that to establish the net loss and everything, right? So this one MAP is also plays important role here. See that establish net loss if they have a wide range of security to realize or need to convince an independent lawyer that realization is not commercially practical. Next, yeah, registration of security. Shipping lenders must not forget that, as well as the registration of mortgages at the appropriate ship's registry. Some jurisdictions will require certain security documents created by companies, incorporate them to registered companies or other public registries. This principally applies to the common law jurisdictions which have taken the company law from England, right? England, London. That's an important thing for the Marine Insurance Act also. Already I told about UK is the forerunner, and Marine Insurance Act 1906 followed England. So various things. So they are taken from the company law from England. In shipping, Cyprus, Malta, Hong Kong, and Singapore are the most significant. These are the countries also follow that. So registration of security, how it happens. Right. Already I told about that equity we discussed about, right? Equity, they have their own funds and everything. So that's also possibilities there. There again, mezzanine finance. Lastly mentioned should be made of mezzanine finance. Simply speaking, this is a form of debt which we subordinate to the owner's principal or senior bank borrowing in return for the higher risk involved in being postponed to the senior debt. When it comes to repayment and security, the lender will demand a significantly higher interest margin and will often receive from the equity kicker. That is, right to take an equity slate in the borrowing company at future date, usually at a fixed or ascertainable future price. So, mezzanine finance, importance of mezzanine finance and everything in the shipping industry. Okay, right. Next one. I'll move next slide. Mezzanine finance also, I think the previous session we discussed about that, right? It's a hybrid of debt actually. Okay, it's a hybrid of a debt and equity financing that gives the lender the right to convert an equity interest in the company in the case of default. That's okay, right? See that the lender will demand a significantly higher interest margin and will often receive some form of equity. Right. Next one. Yeah. Analysis of standard ship sale and purchase contracts, S&P contracts, sales and purchase within the structure of the Norwegian Sale Form 99 appendix, important clauses and its importance. See, this is a Norwegian uh, Sale Form 1999. Normally follow that, and Nippon Sale, that is also one of the things is there. So normally the right example and right thing is analysis of standard ship is always found that within the structure of the Norwegian Sale Form 1999 appendix, important clauses and right. The importance of entering into agreement with the buyer seller will be evident from the sale agreement form and related clauses. These clauses, AA411, clearly disseminates the liabilities, responsibilities between all the parties concerned. There cannot be a standard form to cover all the features. However, there are certain sales forms commonly used by various countries. In this unit, an analysis will be made to study about the importance of each clause and the implication of each. So, analysis means you should be able to write the clauses, analysis of S&P contracts, right? So, you can able to write the clauses, different clauses will be there. So, different clauses you can write in the examination, and different clauses also you should know about that in terms of the shipping industry and in terms of examination point, multiple choice questions, right? So, kindly note it down. For a hint, I'm giving bullet points. Analysis means analysis of standard ship and sale and contracts. They definitely kindly note it down. Clauses, various clauses for a better understanding. See this, I all told about here. The importance of entering into agreement with the buyer, seller, right, will be evident from the sale agreement form and related clauses and everything. See this, seller. First one is seller. Usually, the seller will also be the owner of the vessel, but not necessarily mentioned. And the buyer would be well advised to confirm this by examining the register of the vessel in order to ensure the payment to the seller. A buyer always needs to ensure purchase from the owner to avoid legal problems. Yes. So, legal problem should be completely avoided wherever it may be. Suppose we are purchasing the land also, we should go for the legal encumbrance certificate, EC and everything. So, to avoid any legal problems, so for a better mutual understanding. It should be noted that unless the contract expressly states otherwise, the seller need not be the owner of the vessel, because by entering into the contract, he is promising only that he will have right to sell the vessel at the time when the property in the vessel to pass, namely at the time of delivery. Right? Such a right can exist without a seller ever needing to own the vessel, but the seller will be liable for any defects in the title acquired by the buyer, the same way as the seller who sells his own property. However, the actual owner will not be liable under the contract unless he's made a party to it. See that? In a contract also, the amendment and the way what are the points to be mentioned or not mentioned. See that in the last one also, the actual owner will not be liable under the contract unless he is made to a party of it. So everything should be clear on that. The seller need not be the owner. That's the thing of the vessel, right? Because by entering into the contract, he is promising only that he will have a right to sell the vessel at the time. Next one, the buyer or nominee. These are the normally the seller, buyer, vessel. These three combine to form in the analysis of the S&P contract, right? Ship sales and purchase contract. Seller, buyer, and vessel. Okay, the buyer or nominee. Next is the identification of the buyer. First is seller. In practice, this is fairly a straightforward, except in cases. where buyer is named as a nominee. For example, X Limited or nominee, right? Where nomination is made under each contract, the cost. Some kindly mute it, no? Kindly. So everyone kindly mute it, right? Some more noise is coming here. When a nomination is made under such a contract, the question arises of whether or not the original named contracting party remains liable, or whether by nominating the alternative buyer, the original named party no longer has any liability. Right? Following a breach of contract by the buyer, the company which signed the MOA as buyers and put up the deposit and security for the correct fulfillment of the contract claimed that the nomination had substituted the contract so that the nominated party become solely liable as a buyer and the nominating party was relieved from any liability. If the nomination didn't bring about such substitution, then the buyer's assertion would be correct, with the effect that the buyer had never been underdue deposit and could therefore recover it. Okay. So the importance of buyer and functions of buyer. Right? Yeah. See this? On the other hand, once the buyer's contractual obligations have been fulfilled, the vessel have been delivered to the nominated party, and therefore it is essential that any remedy breached by the seller is available to the nominee. If it appears from the face of the contract that the nominee will assume liability under the contract immediately upon nomination, then the contract will be novated at that point, and the original named buyer will have no liability under it all. Right? So the buyer or nominee. Vessel. Next one is vessel. This clause ensures identification of the vessel by a series of details, including name, classification, and year of build, year of construction, that building of the ship happens, flag, and place of registration, call sign, registered tonnage, and registered number. This should be incorporated in the vessel. Clearly, it is important to identify the vessel correctly. So these details are become mandatory. The stated classification of the vessel has ramifications on the rest of the NSF because the buyer normally has a little opportunity to inspect the vessel in any detail and therefore usually has to rely on this classification as a proof of its reasonable condition. Some noise is coming. Please kindly mute it. Hello, hello. Some noise is coming. Kindly mute it. Just a minute. Okay. Thank you. So, yeah. What is NSF? Any idea here? What do you mean by NSF? Anyone? What is the meaning of NSF in shipping industry?
It's a National Science Foundation.
National Science Foundation. Okay. What? Okay.
It's a Norwegian sales firm.
Norwegian sales firm. Yeah. Yeah. Right. So Norwegian sales firm normally, right? Because the buyer normally rest of the NSF. So always focus on that. Clear? Norwegian sales form. It's a mandate. I told you that Norwegian, according to the Norwegian sales form only, everything will be okay. Right? See this? As per English law, already I told about that, and other laws relating to the sale, there is a condition implied that the vessel will correspond with any description applied to the contract. This means that if a vessel does not meet the description, the seller will breach in contract and the buyer will be entitled to claim damages. Definitely. So simply nothing but breach of contract and to treat itself as a discharged from the obligations under the MOA, Memorandum of Agreement. Right? This applies unless the seller can show that the breach is slow slide, that would be unreasonable for the buyer to reject the vessel. These are normal clauses happening here, right? However, the buyer is under no obligation to carry out the reasonable inspection, and the seller therefore cannot argue that he should have inspected any particular aspect of the ship which had been inspected would have been pointed out with description. Similarly, there is an implied term under the law that the vessel will be a satisfactory quality, taking account of the purpose for which vessels are commonly supplied, appearance and finish, freedom from the minor defects, safety and durability. Breach of this quality standard will have the same consequences as a breach of the implied term relating to the description. Each of the terms has to flag place of registration, call sign, registered tonnage, and official number are part of the description of the vessel. I already told about that. Description of the vessel should carry out the flag, place of registration, call sign, everything. So always remember that. That become a standard documents for you, and should therefore match the register of the vessel exactly unless the MOU stated otherwise. So these are the things should be mandatory. Tonnage registration also. Yeah. Now we go for the clauses, different clauses I told about you people in Norwegian sale form also. So see this clause 1, purchase price. This sets out the price to be paid for the vessel. This is about the pricing. Very simple things. Price. It is consistently referred to as a purchase price throughout the NSF 1993. This is contrast with the 1987 edition. See that 87 edition. It subsequently referred to the purchase money, which was undefined but was assumed to be a reference to the price set out on this clause. So see this. Clause 1 is purchase price. In 1993, it's formed by NSF here. And in 1987, it's called as the purchase money. Because money means you can't undefine, right? You can undefine. Anyone can tell me money and price. How will you differentiate this money and price actually? Whether it's both are same or different? Karthik or anybody? Prabhakar sir, anybody?
Yes,
what
sir,
is the difference between the purchase price,
different.
purchase money? Yeah. Yes, sir.
Exactly unable to define, but
yeah.
but
actually, it's the wrong term. Actually, 1987 edition they followed the purchase money. So that is the reason NSF focus on the purchase price. Actually, they very much focus on the price, right? Because seller, buyer, vessel will be there. Why should we call it a money, no? Right? So, as Prabhakar told, we can't define that. Money means different, right? We are assuming that price and everything, but it's not in a straightforward thing, right? So, clause 1, purchase price, PP. It's not as a normally in a Norwegian sales form. PP, it's called as a PP, purchase price, instead of PM, purchase money. Clear? Right. So, clear. Maybe you can note it down. Clause 1, purchase price for a better understanding, and you can write the answer also. 1993, it's happened. 87 is purchase money. Yeah. Yeah. Clause 2 is deposit. See this. This clause is a deposit. This clause sets the time by which the deposit must be lodged. This time is a strict condition, a breach of which entitles the seller to cancel the contract. However, what remedy would be seller have? entering into the sale contract. The buyer then failed to pay the deposit. The Blankenstein case suggests that seller should be entitled to sue for damages equal amount of the unpaid deposit rather than for the damages suffered. Right. However, in Blankenstein, a sale contract was based on NS 96 edition, and clause 13 thereof, buyer's default only referred to failure to pay purchase money and made no mention of failure by the buyer to pay the deposit. The NSF 1987 edition, as NSF 1993, clause 13 specifically states if the buyer fails to pay the deposit, may only claim for the losses and expenses incurred as well as interest rather than the full deposit amount. It is only after the deposit has actually been paid that the seller may claim the full deposit as liquidity damages. So this is the importance of the deposit. In clause 2 means deposit. Kindly note it down. Clause 1 is purchase price. So kindly note down this. Okay. So I'm going to try. Clause 3 payment. This clause states that purchase price shall be paid in full free of bank charges, but this conflicts the deposit clause. The purchase price includes deposit. Under the terms of deposit clause in the NSF, that is 2, half of any bank charges incurred in relation to the deposit are to borne by the seller. It is therefore accepted practice that the purchase price when paid shall be made up of sum equal to the total price less half the bank charges relating to deposit, the aggregate of which shall be paid free of any further bank charges. The clause then requires the purchase money is to be paid on delivery of the vessel, but not later than 3 banking days after the vessel is every aspect physically ready for delivery in accordance with terms and conditions of this agreement, and notice of readiness has been given in accordance with the clause. Payment issue, purchase price, deposit, payment. So purchase price shall be paid in full, free of bank charges. But it includes the deposit. So clause 4 inspections. This provide 2 alternative arrangements for inspection by the buyer of the vessel, classification records and physical condition. The first clause 4A, which is deemed to be applicable alternative unless deleted here, is a confirmation that such inspections have been carried out before MOA is signed and the sale is not therefore subject to inspection. There is no equivalent in the 1987 edition. Such a provision has to be negotiated. The alternative clause 4A and 4B. So that's the important thing in inspection. So what is 4A? Is a confirmation that all such inspection have been carried out before the MOA is signed out. Okay. The alternative clause B is drafted to provide that the acceptance of the classification records, the satisfactory physical inspection, are conditions precedent to the rest of the contract, with the exception of the buyer's liability to place the deposit to a joint account and the seller's obligation to make the vessel available for the inspection. So that if the buyer does not accept the vessel after the inspections, he has no liability under the contract and demand the return of the deposit. Right? The question of whether or not the vessel to be accepted following the inspections is entirely within the buyer's discretion. There is no objective standards whether the vessel or not the vessel or records acceptable. However, this position can be varied by using wording other than the standard NSF wording, right? So that the buyer may be only entitled to reject the vessel if there is objectively something wrong with it. The seller, on the other hand, can only withdraw from the contract if the buyer chooses to reject the vessel or fails to inspect within the time period, right? Proposed by the parties. So, inspections class 4A and class 4B. So there are two alternative arrangements carried out by the time of inspection. Next one, I move next one. Clause 5, notices, time and place of delivery. This clause is divided into 4 parts. The subclass which deals with the various notices to be given. The parties are left to insert up to 3 periods of notice, which seller should give to the buyer regarding the place and time of dry docking, underwater inspection or delivery as the case may be. Each of these is only required to estimate, so it would be difficult for a buyer to bring a claim against the seller if any notice considered to be inaccurate as to time or place. However, this may be possible if no notice was provided or if it be shown that the information in any notice was a genuine estimate. So 3 periods of notice and time and place of delivery will be mentioned in the clause 5. So kindly note down the maybe hints for your reference. It will be easy for you, right? Next one, clause 6, dry docking diverse inspection. This clause offers 2 alternatives, the first of which is deemed to be selected if neither is deleted. This requires the seller to dry dock the vessel as the port of delivery to enable the inspection of the vessel's bottom and other underwater parts. This will generally afford the buyer the opportunity to inspect this part of the vessel. However, the inspection procedure is very different to that provided in the clause 4. Here, it's a representative of the vessel classification society who is appointed to carry out the inspection and not the buyer personally, although the buyer is entitled to be present. So, dry docking and diver inspection, they will inspect the vessel completely. So, vessels classification society also appoint the people and everything. They'll do the dry docking and divers inspection, the bottom, vessel's bottom and other underwater parts and everything. What is the front portion of the ship actually? Front part, it's called as? Anyone?
Bow, sir, bow.
Oh, okay. Back.
Stem.
Great. Bow and stem. Definitely. Great. Great answer. Yeah. This is the basic things. At least everyone should know that. Bow and stem. Very important in the ship. So that also everything will be inspected. Okay. Next one. Clause 7. Spares, bunkers, This clause of the contract deals with the items that are to be delivered along with the basic hull and superstructure of the vessel. In particular, it deals with the inclusion of spares which belong to the vessel at the times of inspection or to be delivered along with the vessel. However, if they are used prior to delivery, they do not need to be replaced, although the used parts will have to be delivered to the buyer. So, clause 7 focus on the spares, bunkers, etc. So, these clauses are very important during time of the analysis of the sales and purchase of the ships, right? So it tells about the clear thing. Clause 8 is the documentation. Clause 8 begins by providing the parties to agree and insert the piece of documentary delivery. This does not provide for 1987 edition, so that the additional negotiated clause required. Okay, it will be helpful in a meaningful thing. It should be noted that documentary closing will be normally takes place at different location to the place of physical delivery of vessel. The venue selected will generally be chosen for a number of reasons, including ease of effecting and receiving payment, the ease of obtaining information, and evidence from the ship's existing port of registration, and the ease of access to buyer's chosen register for the purpose of registering title, and usually registration of mortgage in favor of bank financing the purchase. So the importance of documentation, but it's not happened initially, right? But it's included mandatorily in the revised one. Right. Next one, class 9 encumbrances. This is seller's warranty. You people know that encumbrance certificates and everything. Seller's warranty that at the time of delivery, the vessel is free from all charters, encumbrances, mortgages, and maritime lines, or any other debts whatsoever, being debts which time of delivery have given rise to actual existing rights affecting the property in or use the vessel. There is also an indemnity against the consequences of any claims which have been incurred prior to the time of delivery being made against the vessel after delivery. In other words, and the court of appeal held, if after taking delivery of the vessel is subsequently arrested or claims are brought against vessel in each case as a result of events which took place prior to the delivery, the buyer entitled to be indemnified by the seller for all the costs, losses, damages resulting therefrom, regardless of whether the liability asserted by the claimant exists or not. Right? So, encumbrance is the seller's warranty. Will happen. Classes 10 focus on taxes. Class 10 apportions liability for taxes, registration fees, and deletion fees. The buyer pays those connected with the purchase and registration, and the seller pays those incurred in connection with the sale and deletion of the vessel. So normally taxes, class 10, what are the taxes will be incurred there? Class 11, condition on delivery. It states that vessel remains at the seller risk and expense until delivery, so that if any damage happened to the vessel, for seller to pay. If the vessel is lost at seller loss, and if the vessel incurs any liability, it will be the seller's liability. Note that where the vessel is lost, then the obligation is delivered to avoid under clause 5. There is so whether it is an actual, constructive, or compromised total loss. This clause also implies on the seller an obligation to repair the damage that is incurred after the date of buyer's inspection, because it obliges the seller to deliver the vessel in the condition in which a time of her inspection, subject only to fair wear and tear. Accordingly, any damage other than the fair wear and tear must be repaired at the seller's expense before delivery takes place. Okay. So there's nothing but how it's a vessel at time of delivery, the condition, the nature, what happens, right? So clause 11 focus on condition on delivery. Next one, clause 1 C side, clause 11 imposes 3 further obligations, namely to deliver the vessel with a class maintained. The 1987 edition says in class, but is often amended to read class maintained. So in class is reclassified, re-amended as class maintained without condition recommendation, right? For which the purpose, any notes on the survey's report are to be ignored, provided they are accepted the classification society. Next, free of average damage affecting class, and with the classification, national and other certificates valid and unextended without conditional recommendations. So in clause 11, 3 further obligations, right, has been amended. Clause 12, name markings. This requires that the buyer changes the name of the vessel and alters the funnel markings. This is generally included because owners like to retain the names of their ships when they sell them, so they may use them in the future. Also, this is no guarantee for a seller that he will be able to reuse a name. The reference to the funnel markings to prevent buyer operating the vessel under the seller's house colors. So name and markings also plays an important role. Funnel markings, right, to prevent the buyers operating the vessel under the seller house colors. Buyer's default, clause 13. This deals with the default by the buyer and sets out the seller's rights against the buyers in 3 different situations detailed below. What are the 3 buyer's default and everything? First one, if the buyer does not pay the deposit as required, the seller can cancel the agreement and claim the compensation for losses and expense plus interest at an unspecified rate. In the 1987 edition, interest was at predetermined rate of 12%. Neither version makes clear the date from which interest should run, right? For example, the last date for paying the deposit, the date expenses were incurred, the date of claim, and so on. These are the various reasons. Second, if the deposit is paid, but the purchase price is not, then the deposit together with any interest earned is treated to be as liquidated damages for the seller, who may claim all of it as well as cancelling the agreement. Third one, if the deposit is paid and the purchase is not, and the deposit is insufficient to cover the seller's loss and expenses, then the seller may claim further compensation together with the interest at an unspecified rate. Again, 1987 edition provide for the rate of 12%, as well as the cancelling the agreement. So buyer's default happens, seller will claim all these 3 clauses or 3 different situations, right? When interpreting this clause, it should be remembered that buyer's duty is only to pay the purchase price when the vessel is tendered for delivery in accordance with the terms of the contract. So if it is not properly tendered for delivery in accordance with the terms of contract, then the buyer's duty to pay the purchase money never arises and the seller is not entitled to retain the deposit or claim damages under this clause. It has been suggested that provisions regarding immediate cancellation and forfeiture of the deposit for the late payment are too harsh. So indeed, the MSPL 1999 form provides for up to 10 days demurrage to be payable, agreed daily rate before the seller will have the right to cancel and the buyer's deposit is forfeited. Such a provision could form the basis of negotiated amendment for the concerned buyer. So these are the things mentioned in the clause 13. So kindly note it down. The option of cancelling the agreement, namely failure to give notice of readiness in accordance with clause 5A. Okay, which provides that when vessel is at the place of delivery and every respect physically ready for the delivery in accordance with this agreement, the seller shall give the buyers a written notice at the readiness of delivery or failure to be ready validity to complete the legal transfer by the cancellation date as per clause 5B. Then follow the words provided always that the seller should be granted a maximum of 3 banking days after notice of readiness has been given to make arrangements for the documentation set out in. It has been suggested that these provisions should convey the meaning as failure to give notice of readiness in accordance with clause 5A on or before the cancellation date, on failure to arrange for documentation set out in clause 8, including being ready to complete a legal transfer within 3 banking days of giving the notice of readiness. So that 3 banking days, 3 working days, so plays an important role that it should be followed in the seller's default. Okay. So this is clause 14. So clause 15, buyer's representatives. This clause entitles the buyer to put 2 representatives on the board of vessel for the purpose of familiarization only. It provides that the representative shall be at the sole risk and expense. Further, it is not possible to restrict the seller's possible liability for any personal injury that may be caused to the representatives. It is for this reason that an indemnity letter should be obtained from the buyer or better to the buyer's P&I club before allowing the representatives on board. It is submitted that letter of indemnities shall be signed by the representative themselves as provided in the clause 15. It's unmitigated protection for the seller unless it is clear that a buyer signing behalf of the buyer. So buyer's representatives, role of buyer representative. Yeah. The standard documents, these are the clause, 15 clauses are there. So kindly note it down, the classes and everything. The standard documents acting for buyer, registration, for buyer registration, seller authorization, and buyer's authorization. When acting for buyer, there are 3 main concerns to address regarding the standard documents. First, and primarily, one must stay certain the documents produced by the seller will be sufficient for buyer to obtain good title and permanent registration under the buyer's intended flag. Secondly, one must ensure that the seller or his representatives has the power or authority to transfer the vessel to the buyer. Thirdly, one should ensure that the buyer or his representatives also has necessary power or authority to buy and pay for the vessel. So these are the standard documents normally used. Each registry has different requirements for obtaining permanent registration, and the major ones are the early units. The NSF 1993 set out various commonly required documents that are to be provided by seller as matter of course. It also requires seller to provide additional documents buyer's chosen registration may require for timely notification of the requirements to the buyer. Okay. Okay. Next, some of the points here. Who should an S&P broker? Okay. No, this broker role of brokers and everything. I think we discussed about that. Once again, we'll see this. First, obviously, the broker's own principles. This is not easy to assume. Say a chartering context where one principle tends to have a repetitive need to be in the market. A ship owner needs a constant supply of cargoes and a charterer a constant supply of ships. Most buyers and sellers of ships acquire ships in order to operate them and only dispose of them when circumstances make it necessary to do so. Right? Luckily, indeed, is the S&P broker who acts for principle, who looks upon ships themselves as a trading of commodity and seeks only employment for them. in order to have them profitably engaged with waiting for the right market conditions to enable them to be sold at a profit. As well as knowing the principles, it is necessary to know how each buyer operates. One needs to identify the DMU, the decision-making unit. If dealing with an entrepreneur, then it is likely that the decision maker will be the direct link. But if the principal is a large limited company, contact is likely to be with the subordinate and with the larger the organization. Right? So the greater number of people between the contact point and the final decision. Similar constraints will apply if the principal, seller, or the entrepreneur will possibly give a response right there on the phone but bring the company. Man will consult colleagues before providing a response. So these are the things. Who should a S&P broker know? So these are important. Another important difference among principals is the attitude to brokers. Some will learn heavily on the broker's advice in terms to be agreed or to amended during negotiations, and also expect guidance from the broker, which one are not a fair price. At the other end of the scale, the principals will require no more from broker than the dealer, transmitting the instructions and reporting back the replies. Right? Okay. Yeah. What should be a broker now? And S&P broker is only as a good of the data in the office, which is instantly available. Some of this has to be broker's head, so that knowledgeable response can be given to the first approach by the potential principal. Right? Very shortly after the response, that the broker must be able to provide details of suitable ships within the range of interest of the buyer, and whether the principal is a buyer or seller. So these are the things. Finally, the broker must know the market. If people know that, finally, the broker always plays an important role there. Knows the market. Price of ships depends, of course, upon supply and demand. To know the circumstances that affect the demand, what are the demand will be affected. So all the things will be, he should know that. Almost the important S&P market itself, because signs of firmness or weakness of general nature is supposed to be a temporary blips. Inevitably, they influence the views of buyers and sellers of ship. Okay, next, demolition market dynamics. A merchant ship may change the ownership. So many hands during its life, but the life is finite at the end. There is only one sail left, which is to be ship breaker. At one time, it is reckoned the ship life was 20 years, but this varies considerably for a variety of reasons. The state of the chartering market is, of course, of major general influence. Particular factors include the type of trade in which the ship was engaged, the care lavished of the ship by owners, even the policy of the owner. To these reasons must be read in the recent IMO convention phasing out single-hulled tankers. Right? One must realize when ship is sold for further trading, could well commence to trade in direct competition with the seller. Some owners may insist on selling a ship for scrap, even has several years of useful trading life left. This is why potential competition is eliminated. The price for scrap will be much less than the price for trading, but shippers tax accountant can often turn this to their advantage. So you know that shipping breakers become old and everything. Demolition of market dynamics. That's also a huge part of that. So this is about the sales and purchase of ship contracts and everything. So unit 3 is with this is over. I covered all the important points, brokers and clauses. A very essential. This unit. A very important thing is that 15 clauses are there. So that's an important question for you. What is the clause and how it deals with that? Okay. Are you clear with this unit 3? We covered unit 3 also. We finished that. Okay. So we have a 5 minutes break. Then we'll join. Now time is 9:57. We'll join with another 5 minutes. Okay.
Okay, sir.
Okay. We'll start with unit 4. Right. Okay. Thank you. happens to you maybe. So that time, multiple choice questions will be there. So kindly note down what you mean indemnity and everything, right? You can able to give the right answers. Yeah, next. Yeah, I will move to next slide. So kindly note it down this indemnity, what you mean indemnity. Marine adventure includes any adventure where any insurable property is exposed to maritime perils, that is perils consequent to navigation of the sea. It also includes the earnings or acquisition of any freight, passage money, commission, profit, or other pecuniary benefit or other security for any advances, loans, or disbursements is endangered by the exposure of insurable property to the maritime perils. Yeah. Marine adventure. I think you can able to see the slide, no PPT. It's visible.
Yes, sir.
Yeah, there's some problem in my. Okay, right. So, what do you mean by marine adventure? So, this is one of the thing. Okay. Marine adventure also includes any liability to the third party, may be incurred by the owner of or other person interested in or responsible for insurable property by reason of maritime perils. Okay. So it is called as a maritime adventure. What are the perils happens in everything? So marine adventure, importance of marine adventure. Yeah, a contract of marine insurance may by its express terms or usage by trade be extended so as to protect the assured against losses on inland waters or on any land risk which may be incidental to any sea voyage. So, contract of marine insurance. An insurer underwrites or subscribe to risk in return for the payment of premium by the assured. See that an insurer underwrites or subscribe to a risk in return for the payment of premium by the assured. The premium is considered compensation for running risk of the insured property and is normally retained whether or not the insured property is lost or not. So already people know that the premium, the importance of premium, according to the sum insured and everything, according to the risk, whatever the things you are insured. So according to that, the premium is calculated, and you should pay the premium for running the for risk, right? So that will be compensated. The size of premium depends upon the insurer's estimation of degree of the risk that the insured property will incur a loss, and on amount of indemnity he will have to pay. This is the how to decide the premium, the size of premium. Yeah. Next, the word risk being in this context to refer to the risk of loss occurring in connection with the insured property And the risk of loss can include not only actual property, but also financial losses, such as those resulting from the loss of freight, passage money, commission or profit, as well as certain types of liabilities incurred to the third parties. So what are the risks and what do you mean by risk, and what are the things covered in the risk, right? See that then the risk of loss can include not only the actual property, but also financial losses. So overall, it's called the financial security also. Next one. The specification of insurance contract usually stipulates certain limitations as to the type of occurrences that may cause losses for which the insurer will pay indemnity. Such occurrences are called insured risk or insured perils. What is perils actually? We discussed about marine adventure. Peril. What is peril? Examples of peril related to marine, right? Any examples? Or what do you mean by peril? Hello, yeah, hello. I can't hear you. Yeah, voice. Yeah.
Like storm or like pollution against the act of
Type of slightly louder, no? Yeah, something you're telling I can't understand. What's something you're telling, right? What is that? Peril is equal to what? Actually? Yeah. Okay.
Peril means dangers involved.
Perils means danger. Yes.
Danger, yes.
Dangers involved. Maybe immediate danger or anything will happen. Serious dangers, right? Danger.
Yes.
Danger. Any example for the ship? What type of dangers will occur while in the sea? Actually, for that danger, we should insure, right? Insurance should be taken. What type of dangers will occur?
So storm collision like that. Sir.
Storm, collision, yes, great. Storm, collision, any other? Storm, yes, storm, collision, any other? Any other possibility?
Sudden financial loss, sir.
Sudden financial loss, okay. Right. Perils examples, yes, rightly told, storm, collisions will occur. What about lightning? That's it? Lightning, thundering, that also affect in the marine?
Yes, possible, sir.
But lightning, yes, severe lightning causes maybe volcanic eruptions. Sometimes that's the thing. Collisions, various forms of thing will happen, right? So these are the some example of perils. Immediate danger. Perils means danger. Very simple thing is danger. Suddenly occurs, serious danger, right? So for perils also we should insure for the marine. See that the term perils of the sea refers only to accidents or casualties of the sea and does not include the ordinary action of the winds and waves. Besides, maritime perils includes fire, war, perils, pirates, seizures, and etc. See that even pirates also. A marine insurance policy may specify that only certain maritime risks or perils of the sea are covered. Okay, what are the things to mention? And only it will be covered. Yeah. So kindly note it down. Some of the important types of marine insurance. In marine insurance also there are important types as follows: hull insurance, cargo insurance, freight insurance, liability insurance. These are important types in marine insurance. Everyone should know about this. Marine insurance means these four comes into your mind actually normally, right? Hull, cargo, freight insurance, and liability insurance. First one is hull insurance, marine hull insurance. This pertains to insurance of ocean-going ships and other vessels. Hull, what do you mean by hull? Yes, you people already know about that because you know the ship parts and everything. Hull refers to the body or frame of the ship. Okay. Hull insurance provides the cover of the hull and machinery as well as in respect of materials and outfit and stores and provision for the officers and crew. So hull and machinery, it's called as H&M or HM. Also, kindly note down the abbreviations for that. Normally in the shipping industry, they will call it as H&M or HM. You should be able to answer it. Hull policy consists of basic policy attached to institute clauses, which are drafted by the Institute of London underwriters. Again, UK framed that. This hull is there, na? Hull refers to the body or frame of the ship. What about that Titanic ship, whether it's correlated here? Any related to Titanic ship incident, accident, and hull, everything? Anyone? Whether it's correlated or not correlated, or whether it's resembled to that? Any idea on that? Titanic ship
Yes,
accident, huh? Titanic.
yes, sir.
Yeah.
Yes, sir.
Yes, sir. Titanic is a hull, sir. Hull problems.
Yeah.
It's not double hull.
Okay. Which one? Karthik? Yeah. Karthik is taking.
It's not double hull ship. After the Titanic, only the double hull ship is coming.
Okay. Okay. Great. Yes. Yes. Prabhakar sir, you want to say something? You also. Yeah.
Yeah. Yes, sir. Actually, if you see the Titanic incident,
Yeah.
actually, by the time when the ship started sailing, it was called that unsinkable ship. Because
Yes.
that is the time before that, if you see the ships not made up of steel, of course they are making, but not that much. So this made high quality steel, and the if you the properties of the materials which used in the Titanic,
Okay.
and the technology were used
Mm.
were extremely on a higher side on
Okay.
that time basis.
Yes. Yes. Definitely. On the olden
And
days.
that because of those specialized technology we're using, specialized materials we're using, the all those things they compelled. Then only if you see the passenger who sailed on them, all millionaires.
Okay.
So
Yeah. Yeah.
because of these reasons only they started sailing on that. Then that time that was called that way. And even after the maiden voyage itself, it's sunk. That there are various reasons for that. And if you see there are terms like watertight integrity.
Okay.
So since ships were designed on very high quality steels, but the water integrity may not be maintained. Even though they were using so much high quality strength steels, the rivets were used is not that of quality.
Definitely.
So once water started increasing into the compartments,
Okay.
so they are unable to hold those impacts.
Okay.
And moreover, this watertight compartments they have not made. So nowadays, most of the ships, not most of the ships, every ships they making watertight compartments for the in case if any particular compartments flooded due to collision or anything else, still ship cannot sink. They hold some at certain limit. Even
Right.
if, for example, in case forward, aft, middle, wherever it's breaches, at particular after flooding some particular length, still ship have some stability. So, but those days, what they did, they only built the watertight compartment up to 80%. So
Okay.
once one compartment started filling, that started overflowing to the other compartment, and there is no more watertight integrity.
Definitely.
So those things was involved, but That is the main reason. After that, the SOLAS, the safety of life at sea, there is a biggest convention came into force due to millionaires were died. If of course these poor people would have died, nobody will think of it. But since millionaires were died and things become very serious, and the convention came with respect to the safety and the safety and the integrity of the ships.
Yes.
And then only though too much regulations came into force, and the hull and machineries insurance also again associated with that.
Definitely, true. Yes, that will become a base for that. Yes.
Yes.
Right. Okay. I think Prabhakar sir nicely given the thing. Thanks a lot. Good example that one actually. Yes, how it happens, how this hull missionary insurance, hull insurance came to the picture, etc. So it's one of the things, right? So kindly note down this for this. Shall I move to the next slide? This is cargo insurance. Cargo insurance covers the cargo or goods contained in the ship and the personal belongings of the crew and passengers. Personal belongings of the crew and passengers also covered there. It provides to cover for various transit perils in respect of goods and merchandise in transit from one place to another by sea, air, road, or registered post. Transit risk or perils are covered under the marine insurance. So these are the things related to the cargo, marine cargo insurance. Second type. Okay, see, marine insurance plays a vital role in the import and export and internal trade. Goods while in transit are liable to be lost or damaged through one another for various of perils from the time it leaves the warehouse of the supplier till it is received at the final warehouse of the consignee. The loss or damage suffered due to these perils is due to transfer to the insurer in lieu of the premium. So this is also important then. Import export. So transit, the goods are in transit, everything. So everything covers under the marine insurance. Next, freight insurance. Freight insurance provides protection against the loss of freight. In many cases, the owner of goods is bound to pay freight under the terms of contract only when the goods are safely delivered at the port of destination. Yeah, safely reaching, right? If the ship is lost on the way or cargo is damaged or stolen, the shipping company loses the freight. Freight insurance is taken to guard against such type of risk. Yes. So the name itself, you people know that what is the importance of freight insurance? What are the things covered there? Liability insurance is one which the insurer undertakes to indemnify against the loss which the insured may suffer on account of liability to a third party caused by collision of the ship and other similar hazards. As you rightly told, collision, some of the hazards and everything, collision of the ship, liability insurance. Next is marine insurance policy. Hull policy consists of basic policy attached to the institute clauses, which are drafted by the Institute of London underwriters. A marine insurance policy is a document which embodies all the particulars and the terms and conditions for the construction of the policy. Contract must be embodied in the policy. So contract should focus on this marine insurance policy. So all the particulars, terms and conditions, if you purchase the insurance also, all the things will be mentioned there. That the same thing also happens here. So drafted by the Institute of London underwriters, institute clauses. Yeah. A contract of marine insurance shall not be admitted in evidence unless it is embodied in the marine policy in accordance with Section 25 of the Marine Insurance Act. The policy must be signed or by on behalf of the insurer. It must contain the following: the name of the assured, the subject matter insured, and the risk insured against, the voyage, period of time, or both, as the case may be, by the insurance. The sum or sums insured, the name or names of the insurer or insurers. So these are the things to be included in the policy. Next type of marine policies: voyage policy. First one is voyage policy. When a marine insurance policy embodies the contract to insure the subject matter at and from or from one place to another or others, the policy is called a voyage policy. What do you mean by voyage policy? In a voyage policy, the subject matter is insured for a particular voyage, irrespective of the time involved. In this case, the risk attaches only when the ship starts on the voyage. So it differs. The policies of differs, marine policies. So first one is voyage policy. So it's one of the important question in the examination. What are the different types of marine policies normally used? So kindly note down this. Time policy is an insurance policy embodying a contract in which the subject matter is insured for a definite period of time. The ship may pursue any course it likes. The policy would cover all the risk from perils of the sea for the stated period of time. So time is mentioned here for a definite period of time. So you also, people know that yearly once, suppose example is a health insurance, everything you know that for an individual, yearly once it's there, right? A time policy cannot be offered for a period exceeding 1 year because it will be invalid, but it may contain a continuation clause. What do you mean by continuation clause? The continuation clause means that if the voyage is not completed within the specified period, the risk shall be covered until the voyage is completed or till the arrival of the ship at the port of the port. So it's a 1 year only. You people know that it will be because it will be invalid, but it may contain a continuation clause. So once it voyage doesn't happen, it will continuation clause will occur. So kindly note down why it's called a CC actually. What do you mean by CC here? Continuation clause in the time policy. So kindly note on this continuation clause. Definitely be asked the multiple choice questions. The time policy. Next one, mixed policy. Mixed insurance policy is a combination of voyage and time policies and covers the risk during a particular voyage for a specific period of time. A contract for both voyage and time may be included in the same policy. So both are included. Voyage and time is included and called as the mixed policy. Next, valued policy. A marine insurance policy may be either valued or unvalued. A valued policy is a policy which specifies the agreed value of the subject matter insured between the insurer and the insured and is specified in the policy itself. HUD and good policies are invariably valued policies. Hull and goods policies are invariably valued policies. The value fixed by the policy is between the insurer and assured, conclusive of the insurable value of the subject, intended to be insured, whether the loss to be total or partial. However, unless explicitly stated, the value fixed by the policy is not conclusive for the purpose of determining whether there has been a constructive total loss. So loss may be total or partial. Unvalued policy. An unvalued marine insurance policy is a policy which does not specify the value of the subject matter insured. Subject to the limit of the sum assured, it leaves the value of the loss to be subsequently ascertained in the manner explained in the policy itself. It means that the method of ascertaining the value of the loss has been agreed upon between the insured and the insurer beforehand in case of the unvalued policy. Unvalued policies are used in connection with the priority insurance, presumably because the insurance value would offer very little form from the insured value if they later were agreed. Next, open covers. In order to arrange their marine insurance in advance and to be assured of cover at all times and also to avoid the effect of possibly fluctuating rates, it is a practice of regular importers and exporters to avail themselves of some kind of blanket insurance. One way of achieving this by means of open covers. What do you mean by open covers? Marine insurance in advance and assured of all cover at all times and also to avoid the effect of possibly fluctuating rates. An open cover is an agreement between the assured and his underwriters, under which the former agrees to declare and later to accept all shipments coming within the scope of the open cover during the period of time. The open cover itself is simply an original slip with a disadvantage that, like other slip, is not legally enforceable and is binding in honor only. Okay. Whenever shipment is made, the assured notifies and gives the details to the underwriters who then issue a stamped policy. Although the underwriters aggregate liability during the period of cover is limited, a stipulation is invariably made that no shipment shall exceed a specific sum in any one vessel. Floating policy. This provides another method of obtaining a long-term contract for good insurance, which may be used instead of an open cover. Such policy has the advantage of being a valid marine policy. This is one of the things. Obtain a long-term contract for goods insurance. Instead of that open cover, they use the floating policy. A floating policy describes the insurance contract in general terms and leaves the names or names of the ship or ships and other particulars to be defined by the subsequent declaration. The subsequent declaration or declarations may be made by endorsement on the policy or in other customary manner. Unless the policy otherwise provides, the declaration must be made in the order of dispatch or shipment. They must, in the case of goods, comprise all consignments in the terms of policy, and the value of the goods or other property must be honestly stated. An omission or erroneous declaration may be rectified even after loss of arrival, provided the omission or declaration was made in good faith. Right? So these are the things to be followed there. If a declaration of value is not made until after the notice of loss or arrival, the policy is generally treated as invalid policy as regards the subject matter of that declaration. Such policies are very useful to merchants who regularly dispatch goods through the ships. So these are the things included, that different types of policies and what are the importance. So I think if people know that. Next one is the syllabus also mentions London market, international market, right? So London market, because London underwriters normally they only form that and everything. The term London market is commonly used to refer to all the international and United Kingdom insurance and reinsurance practitioners based in London. The market includes both Lloyd Insurance, represented by the Lloyd's Market Association (LMA), and the individual companies represented by the International Underwriting Association of London (IUA). So London market importance, how it happens, and how it correlates with the marine insurance and everything. The IUA was formed in 1998 through the merger of London International Insurance and Reinsurance of Market Association and the Institute of London Underwriters. Right? The IUA is the world's largest representative organization for international wholesale insurance and reinsurance companies. The IUA protects and strengthens the business environment for its member companies operating in through London. The London market is the only place in the world where all 20 of the world's largest insurers and reinsurers are represented. Gross premiums on the market were estimated at euro 22 billion in 2004. Between 10% and 15% of the world's largest industry insurance is placed on the market, and in certain key classes of business, such as marine, it is reported to be much higher. See that 10% and 15% of the world's largest industry insurance, right? So how this marine plays an important role in London market and everything. Institute classes, I all told about that. Institute classes, London market and institute classes. In the 19th century, Lloyd's and ILU developed standardized classes for the use of marine insurance. These have been maintained ever since and are known as institute classes. The institute classes are made for marine hull, including machinery and cargo insurance. Hull, yes. The London Market Joint Hull Committee, in consultation with ship owning associations, insurers, average adjusters, and brokers, developed international hull clauses, a new set of hull clauses. Right? The IHC, which became effective on 1st November, made not a major rewrite of 1983 and 1995 Institute time clauses. ITC, it is called as ITC. Rather, ITC have been updated to reflect current market practices. The international hull clauses are divided into 3 parts. Part 1 contains the principal insuring conditions. Insurance conditions. Part 2 represents a range of additional clauses that are frequently required by assureds and added to ITC separately. Part 3 contains provision for claims handling and set out the rights and responsibilities of underwriters and assureds. So these are the things happen to the hull and everything. So how it happens, because hull is the basic thing in the marine insurance and policies also. See that ensure time clauses, hull that provides maximum coverage, perils and other losses can expenses covered. Ensure time clauses, free partial coverage that provides similar coverage to that of hull's clauses, but excludes coverage on the missionary damage. Ensure time clauses, total loss only. So see that 1, 2, 3 that provides coverage only in the event of the total loss. This is usually extended to the old vessels, right? So these are the clauses. Cargo, the insurance cargo clauses define risk covered and circumstances excluded. So hull and cargo insurance play the important role in the ship marine insurance. So for that reason, London market focused on the hull and cargo. Duration of validity, coverage and conditions of claims. Coverage is provided on A, B, and C basis. A having the widest coverage and C the most restricted. So these are the various issues involved in the cargo, and right. So London market focus on hull and cargo. So it will cover all the things like I told about the freight and liability also. So this is about the basic concepts in marine insurance and everything. So Unit 5 also will cover some marine insurance principles and indemnity. So clear? I think this unit is over. We'll stop with this. Another 5 minutes, we'll continue with the other topics in marine insurance principles and Unit 5. Okay? Right? So 5 minutes, have a break.
Yes, sure.
Okay, right. Thank you. Hello. Can we start?
Okay, sir, let's start.
Yeah. Okay. So in the previous session, we discussed about the marine insurance and everything. So I think you also know, comes to know that different types of important types of marine insurance and marine insurance policy, right? London market, importance of London market, how it happens, and everything. So next one is also we focus on some marine insurance essentials. Essentials are marine insurance. Then we'll go to the final last unit. So PPT is visible. I changed the PPT, whether it's visible for you people.
Yes, sir.
Okay. Right. So we'll start with this. Yeah, this is normally happens with this. We told about the perils and everything, dangers, right? What type of perils and why marine insurance is important. So these are the from the picture you can see able to see this like fire and everything. A lot of things, oil spillage it happens and hull is broken. So a lot of examples, images shown here. So through that, we want to insure our ship and everything. Important actually, perils, insured risk and perils are there. So definitely marine insurance plays a vital role here, right? Like hull insurance, cargo, freight insurance, liability insurance, and so kind of thing. So see this once again. We'll focus on this. Ships and cargoes have been insured normally for centuries against the insurance perils actually, right? Perils at any time it will come. So it's uncertainty also there. Like suppose lightning is there, what happens? A fire will happen. What happens, right? So many times it will happen like that. Even collision unwantedly, volcanic eruptions. You can't expect that one. So we should be careful on that, and insurance the right one to focus on that. So this presentation intends to present the salient features of marine insurance with a particular reference to cargo carrying vessels. The two principal types of insurance provide for merchant ships are hull and machinery, H&M, all told about, protection and indemnity, P plus I. This is the fifth unit actually, protection and indemnity. HM insurance will provide compensation to ship owners in case of ship damage or loss. P plus I cover will protect and indemnify owners against claims from the third parties. See this? Right? Third parties. These together form a powerful system of insurance that no ship owner under any circumstance should be without for any length of time. So, see this? H&M and P plus I. Normally they mention like that. So these two combine together. Okay. Always remember. So again, hull and machinery insurance, already people know this. Once again, I will cover this. Marine insurance provides covers in case of loss or damage. The classic distinction between ship and cargo insurance. How marine insurance covers a wide area. This area includes terminals, storage depots, and other means of transport between loading and final destination by the cargo. The part that concerns at the time is primarily ship insurance, and secondly, cargo insurance. Marine insurance is a very old type of insurance, dating back to ancient Greek and Roman times. In its contemporary form, it has been closely associated with the advent of the specialist insurance market in London and the final form of Marine Insurance Act 1906. So this is a Marine MIA, Marine Insurance Act. Marine insurance has benefited from the use of standard clauses developed by the Institute of London Underwriters, ILU. Already told about that, ILU and everything. Okay. See this? Marine insurance is arranged through brokers who work on a commission basis between the contracting parties for the owners of the vessel on one hand and the underwriters on the other hand. The role of insurance broker is a pivotal in marine insurance, being the interface between two different areas of economic activity, and has played an important part in the development of city of London as an international insurance hub. See this? Insurance broker, vessels owners, insured, underwriters. Next one. Yes, hull and machinery cover provides insurance protection for the vessel, and traditionally it has been offered by underwriters. Each one of insure only a small portion of the risk and together cover 100% of the ship contract. H&M policies can be provided for a specific voyage, much more often for agreed time period, usually 1 year. I already told about that, 1 year. A yearly renegotiation allows I told about the compensation clause also, among other reasons for changes in terms and the market value of the vessel. Right? The legal basis for this is the Marine Insurance Act 1906 and its standard form SG form has been reworked in 1991 by the London market to include the institute clauses. See that already we discussed about importance of institute clauses. March 91. The losses covered include total losses and partial losses unless otherwise agreed. Typically, TLO contracts with partial losses are not covered. Historically, underwriters have been individuals referred to as names, but corporate underwriting has beyond the increase. The liability of the underwriters towards the owners is joint but not several. So, this is importance of this. See that a distinction between various types of loss can be summarized dramatically. See the marine insurance H&M, total loss, partial loss, how the total loss will occur here, actual total loss, constructive total loss. There are two types of total loss. Partial loss, particular average, general average. See, this is a very important figure. You can note it down also for better understanding how it happens here. Marine insurance, H&M, total loss and partial loss. In partial, particular average, general average. So draw this diagram also for a better understanding. You can write and be able to exam the examination. The successful conclusion of negotiations through the insurance broker leads to the issuance of cover note. The cover note is a temporary document. Insurance companies issue a cover note in order to provide owners with a proof of insurance before all the insurance paperwork has been finalized. Upon conclusion of the paperwork, the insurer issues the policy document and the certificate of insurance. In general, the cover note provides the same level of coverage as well as the full insurance policy. Although insurers make minor changes while they make the final determinations on the risk associated with the insurance policy. The presentation of a cover note to an interested party, example, a lending bank, is sufficient proof that a vessel is covered by the insurance until the full text policy document and the certificate of insurance become available. See that importance of a cover note, what it covers, that. So cover note to an interested party. Yeah. Marine insurance has been designed to provide cover for the marine perils. Marine perils are perils consequent or incident in navigation of the sea. Perils of the sea make reference to all risks particular to the sea, right? Losses emanating from the perils of the sea cannot generally be foreseen or be prevented by competence or by excess of reasonable care by the seaborne staff. So sometimes it happens, the image also shows here. Sometimes happens here. Marine perils other than the perils of the sea are shown below and have a wider scope providing cover of the following. See that various things will be here. Jettison dumping, jettison of the cargo, it has to be intentional. See that, what do you mean jettison, dumping, damage by fire, explosion, combustion, yeah, etc., excluding willful misconduct. Barratry, willfully conducted act by an officer or two against the ship or cargo. The term kindly note it down. Acts of pirates, rovers, thieves, less frequent in modern times. Enemies cover against hostile acts performed by enemy. Restraints or preventions to free use of a port, causing delays and other losses. Arrest makes reference to taking away the vessel force, not a judicial arrest. Detention of vessel and cargo in a port due to blockage of quarantine. Men of war covers losses incurred by collision with the vessel employed by a state or defense attack. Taking at the sea covers losses incurred by stopping a vessel and taking into port for investigation suspecting illegal acts. Letter of marque, countermarque refers to powers vested on an individual by government to attack merchant vessels. Other perils, that's perils of a similar nature, are consequent to any of the above. So kindly note down this of the perils and everything. Other than the perils of the sea, what are the possibilities occur? So kindly note it down. Okay. So next on, marine insurance contracts typically include an amount of money called deductible, also known as excess, which the insured will be asked to pay first in case of loss. Payment by the underwriters will follow, or the same will be reduced by the amount if unpaid by the owners. It follows that the higher the amount of deductible, the cheaper the cost of the insurance policy, as owners accept to self-insure for the initial part of the loss. Another point that needs to understand the cases of collision with another vessel, already people know that running down clause and wreck removal, the underwriters will cover 3/4 of the loss. The remaining part to be covered by fleet side protection indemnity unless policy is amended to. For example, in a case of collision with another ship resulting to loss of pay, say $1 million for the incurred vessel, the underwriters will be under obligation to pay, right, $750,000 minus the deductible, right? That is $50,000. So totally it comes out lakhs dollars, and the P plus I will pick up the bill for the outstanding $3 lakhs. See that how it happens in case of collision of the ship. Unless the policy otherwise provides, the insurer is liable for losses approximately caused by peril insured against. On the contrary, the insurer is not liable if the loss is caused by peril not insured against. In case of breach, of an express or implied warranty by the insured, example seaworthiness, if the loss is caused by delay, which is caused by peril insured against, if the loss is caused by ordinary wear and tear, ordinary leakage or breakage, if the insured voyage is illegal. Okay. So on the contrary, the insurer is not liable if this loss happens like that. If the loss is caused by delay, if the loss is caused by the ordinary wear and tear, ordinary leakage or breakage, if the insured voyage is legal. So when is the insurance not liable? These are the things will be followed. A loss may be, I already showed in the diagram also. A loss may be either total or partial, unless otherwise agreed vessels covered for total loss are also covered as a partial loss. Any loss other than the total is partial loss. There is no third option. A total loss can be either actual total loss or constructive total loss. Okay. See, this actual total loss occurs when the vessel is actually destroyed or irreparably damaged. The vessel ceases to be a thing of kind insured, and the assured is irretrievably deprived of the vessel. So there's no chance to retrieve everything. So that is actual total loss, how it happens here. Constructive total loss occurs when the ship insured is reasonably abundant because its actual loss appears to be unavoidable or more frequently. In case the cost of repairs plus the cost of salvage will exceed its insured value. Right? In CTL, there is a remaining property. Unlike in cases where the ship is lost to the sea or it has been subject to theft. So these are the things. What do you mean by, see, this one very important, this one. I should kindly note it down. The loss, they'll ask in the examination point of view, total loss, actual total loss, constructive total loss. Yeah, partial loss also we've seen that. Yes, partial loss can be either a particular average or a general average. There can be no third option. Okay. Particular average, see this, is a partial loss to the vessel caused by peril insured against, which is not a general average loss. In particular average, there can be no contribution to the loss from the cargo side, as in the case of general average. Examples of particular average are grounding damage, main engine damage during voyage, heavy weather damage, fire on board, etc. Yeah. Particular average has an accidental nature and not the intentional character necessary to qualify as a general average claim. See, that's the difference between that particular average and general average of the partial loss. So kindly note down total loss and partial loss, how it can be differed, what are the differences will be there. So general average, we discuss about this particular average and general average. General average exists when extraordinary sacrifices are made at the time of peril to save the common adventure. It calls for a voluntary sacrifice, serious and imminent danger. The adventure must be actually imperiled. Sacrifice in anticipation is not recognized as general average. And the average, right, is very important. And the objective of the sacrifice must be preservation of adventure. Sometimes the dividing line between particular average and general average is a single incident, needs to be carefully assessed. For example, while the grounding of the vessel is clearly a PA claim, the compensation of the salvos to refloat it is a GA claim due to voluntary nature, the cargo side will have to be contributed. So these are the simple. What are the differences between the general average and particular average? Yeah. General average is adjusted according to the York Antwerp rules by average adjusters who are specialized professionals acting as individuals or as a part of the corporate structure. The appointment of average adjuster is made by the owners of the vessel and the cost of the services is covered. The first object of the work of the average adjuster will be on the calculation of the value at risk, to be followed by the apportionment of the GA among the parties participated in the marine adventure, hull, cargo, freight, and bunkers. So York Antwerp rules, that is the average adjuster role. There are other specialist insurance policies available on request, catering for different requirements. Increased value, otherwise known as hull interest, disbursements, freight interest. Insurance provides cover to the owners in case of a claim when there's a difference between the insured value and the market value of the ship, usually within a margin of 20%. It kicks in a following declaration of the total loss, and it also can include a GA, general average, SUE and labor expenses, and excess collision liability. A freight interest policy insures against the loss of anticipated future earnings of the vessel following total loss going beyond the scope of the classic loss of hire policy. Increased value is popular with bareboat charters, professional ship management companies, and ship owners. So, what is the role of the increased value in the insurance part? And we note it down here. See that these are the specialist insurance policies. Kindly note it down. Increased value, loss of hire policy is interesting to owners, lenders, time charters, and bareboat charters, as it covers losses incidental to the partial loss rather than the total loss covered by the addendum, usually for a time period from 3 to 6 months after the incident. The losses covered include daily running cost following an incident and loss of earnings. Charterers can also insure themselves against the increased cost of charter following an incident which temporarily impairs the operational ability of the vessel. Loss of hire policies do not start immediately after the incident. They usually start 2 to 4 weeks after the incident and tend to be rather pricey. Okay. So increased value, loss of hire policy. Next one, mortgage interest and additional perils. It's called as a MAP also. This specialist policy is designed to protect the interest of lenders, banks, and other financial institutions in case of refusal to pay on the part of underwriters, usually following a breach of warranty by the insured. The additional perils part pertains to pollution liability claims and expenses which exceed the P+I limits, protection plus indemnity, which nevertheless are quite high and difficult to exceed. Banks insist this policy is brought and paid in every financing deal. They do the borrowers alongside the classic H&M and P+I policies they are required to see conducted. The owners of the vessels given out to bareboat charters may also require from the bareboat charters to take out this policy. So this is also very important actually to protect the safeguard, right? For protection purpose. So mortgage interest and additional perils also to be covered, included. It's called as MAP also. Normally it is mortgage and additional perils in marine insurance. See this war risk. War risk cover is applicable in cases when a ship enters into war zone where common insurance policies cease to apply. Underwriters need to be advised strictly 48 hours before the ship enters in such areas and not earlier. Upon receipt of such advice, they will be advising the insured about the list of exclusions applicable and additional premium. So war risk also will be there. These policies offer protection to owners against war-related perils and terrorism and typically have no deductible. The risk they protect against are generally not covered by extended insurance. Therefore, war risk cover is brought separately. Some of these perils are restraint, capture, confiscation, arrest, detainment, etc. Marine war policies will terminate in case of war between major powers. War zones are declared by the Joint War Committee and they additionally include piracy problem areas. On the cargo side, there is a vast variety of policies which are underwritten on basis of the institute cargo classes at 3 levels of coverage. I already shown the previous presentation. This part of the marine insurance is outside the scope of this presentation. Yes, it's a war risk. It's a separate one. It should not be clubbed with H&M or cargo and everything. So it will be separated done. Okay, with the war risk. So these are called the specialized marine insurance actually. Specialized on request. Based on the request only, they will do the marine insurance based on the request. Clear? So I think you people are clear with this. Yeah. Unit 4, we discussed about the marine insurance and I covered this unit 4 also, like a total loss and everything. So any doubts? Are you clear with this? Everyone? You got a basic idea about this subject?
Yes, sir.
Yeah.
Yes,
Total
sir. Yes, sir.
loss and everything. So I think this PPT is helpful for you. Maybe use this PPT also, right? Next one, in the last unit 5, we are coming to the end actually. This P plus I insurance. Normally, it's called as a protection indemnity insurance, Various authors will call it in different names, but P plus I is the commonly used actually. How H&M and P plus I. So always remember, you people know that also because you are the people in the shipping industry. Protection and indemnity insurance. So some of the protection plus indemnity insurance as a mutual character and there are no underwriters as in H&M. P plus I clubs are associations and instead of shareholders, they have members who pay calls and receive the cover. So they have associations and everything. It follows that P plus I clubs cannot pay dividend and any surplus of income over expenses remains in the club. When one offers a service for reward of third parties, uses its facilities, there is always an exposure to claims should something going wrong. Yeah, the same liability of regime applies to carriers, ship owners, or operators. The main areas of risk covered by P plus I club are crew claims. See that collision and wreck removal, crew claim, injury, illness, death, repatriation, substitution cost, deviation. These are the possibilities of the crew claim. Collision and wreck removal, 25% thereof. Damage to the fixed and the floating objects, docks, coral reefs. Yes, coral reefs, very important thing. Coral reefs are damaged. Marine pollution, cleanup damages, cargo damage, shortage, fines, stowaways, others. Marine pollution also become a serious issue. Actually, people know that, like oil spillages, one of the very important thing, oil spillage, and a lot of problems happened and everything. So, what about the marine pollution? I will one more thing I want to fish catching. Anybody can relate to that marine pollution and fish catching because here marine is damage to fixed and floating, like damage to the coral reefs and everything. Ships also causes damage to coral reefs, right? Am I right or wrong? Any idea on that? Ships can damage the coral reefs, right?
Yes, sir. You're right.
Yeah, can damage it because it's a very important actually coral reefs for the sea actually ocean, right? So what happens? I asked the question here. Marine and fish catching that also become a problem actually, right? Any idea on that? Fish catching, catchment of fishes and everything marine.
Yes, sir. That's what because in marine industry, the pollution prevention now is a big aspect going on. So you cannot do any pollution There
Okay.
are too much regulation are in present, and they're enforcing. They're almost to minimize the pollution from ships. So
Okay.
in case by any accident or any heavy spill of oil or
Oil.
chemicals which are carried on board,
Hmm.
so those spills can lead to the disaster type of pollution which affect the marine environment surrounding it.
Hmm.
And of course, you cannot do fishing anymore, at least for 10 years.
True.
Depends,
Yes.
yeah, it depends on how much spilled and how rescue operation
Hmm.
carried out, and how the local administration have the authority and ability to handle it.
Hmm.
So if even if you see recent days, there was a spill what happened near to Chennai
Hmm.
by colliding between tanker and bulk carrier.
Yes. Hmm.
In that spill, even though if you consider the amount of spill was less only, but
Hmm.
still we struggled a lot to
Hmm.
clean up the operations, because
Yes.
we don't have, even though we are growing that much, even though we have decent technology, but still we are unable to do the proper operation of cleaning. So
True.
the
100%.
one oil is spilled on water,
Hmm.
it's very difficult to restrict it, because due to waves and other this thing, it
Hmm.
will keep on spreading over. And once cleaning is very much difficult, because once it's contained with water, it started emulsifying with that.
Hmm.
It's very very extreme to cleaning. And
Yes.
then it's once started going to the shore side,
Hmm.
there it will become very sticky and unable to clean, just
Hmm.
like that.
Yes.
And all the surrounding environments like fishes, other
Birds also, right? Birds, fishes,
yes,
birds also
yes,
get affected,
all
right?
type of marine livings will affect.
Hmm. Hmm.
And due to the coating which forms on the water,
Hmm.
which will restrict the sunlight to penetrate, and other type
Hmm.
of
Hmm. Hmm. Hmm.
feeding supposed to get for the environment livings.
Hmm.
So it is a huge loss to the local
That
fishermen.
dissolved oxygen level, I think, Prabhakar sir, it dissolved oxygen, that
Yes,
oxygen equilibrium.
yes,
That is,
that equilibrium will be disturbed.
yeah. Hmm. Yes.
And maybe you can clean up somehow, and people
Hmm.
let it like that only, then that will be remain lost for a long time. And the
Hmm.
local people maybe depends on the fishing and other type of activities, they will get
Hmm.
affected.
Yes, definitely.
And indirectly, if you see, to recover this, it may take around 10 to 15 years. The
Yes.
long term losses will be very high.
Hmm. Definitely.
That's why
Long term.
marine pollution nowadays very much cautious. And if it is happen in India, of
Hmm.
course, people can manage and by doing. But
Hmm.
if it is happen in Europe and US and all, you have that particular ship owner finished, actually, literally saying, if they have only few ships, they have to
Hmm.
sell the ships to fight the this thing
Hmm.
in court,
Yes. Hmm.
because it is causes so much of environmental effect.
Definitely. Hmm. Yes, sir. Yes, I think Prabhakar sir also mentioned about that causes of that pollution, what happens and how much damage, right? 10 to 15 years, solidly 10 years, we suffer a lot. So he's very careful on that. And yes, he has finally explained. And maybe once upon a time, I think fish also become an endangered species. What's Prabhakar sir? I think fishes become an endangered species, I think. And
Yes,
once
yes,
upon a
that
time,
is important
maybe
point.
after 10 years, no?
That will
Like extinct, it
lead
become
to very
extinct also.
harmful to the humans. Yes.
Yes, like tiger and everything. Once upon a time, we are focused on the fish also. I think that much of the severity is there. That much of problem is there, and even corporates also coming into the picture. You people know that that catching, fish catching, right, sir? Fish catching, catchment, fish catching, and everything. The corporates also catching in the bulk, right? That also happens. What is the normal catching the fish, sir? I think you know that. Catching the fish in a bulk, right? So it affects the small people, small fishermen and everything. Uh, what is the method they use actually? Catching the fish in a bulk.
Yes, sir. Actually, exactly. I don't know, but
Huh.
there are some restrictions that the fishing net, they have some restriction of
Yes.
using some fishing nets.
Definitely.
they
Catching
should
in a
not
bulk,
use-
it should not happen in a bulk, right? But these people catching in a bulk, like corporates and everything, right? For money, and they are that gender species will be completely diminishing. Laying of eggs is not possible, right? So a lot of fish breed is completely vanished. So that type of, that I think you know the trawlers, seeners. I think that was people was a seener, seeners, no seener, SIENERS, NNERS. Senior nets, sir. Senior nets. I think you know that. Anybody knows about that?
Oh yeah, actually not familiar.
In a center, they will catch the bulk actually. Senior. It's called a senior nets. That's harmful to the marine actually, marine environment. So it carries thousands of fishes, like a lot of fishes. So complete breed has been stopped there. So it should be banned actually.
Yes,
But
in that aspect, yes, correct. Because there should be some, some breed has to be left over to keep the breeding.
yes, seeners, trawlers, they are catching a bulk actually. But what happens if you are catching the bulk? That breed also affected. The small fishermen, the people depend on the sea. That also get affected. Fishermen gets affected. So a lot of things are there. So right. So even environment gets damaged. Species become endangered at one point of time, extinct also. So so that should be properly monitored and care should be taken. In this area also, P+I club, protection indemnity club, also focus on that areas also. Nowadays catching of fish also become a huge problem also. Senior net, you can see the website also. Senior nets causes environmental damage, like corals, a lot of things, like other species in the marine gets affected with that type of fishing. Trawlers, seeners, right? Normally they are doing in the countries like China and everything. Seen us also doing that. India is also, some people are practicing. So that should be completely abolished and banned also. Right? So, okay. Next one, we'll go next slide. Yeah. P+I mutual insurance associations date back to the middle of the 19th century. The P+I concept, quite straightforward. Members regularly pay to the club money, advance call, and out of the accumulated funds. The club covers the liability of its members towards third parties against the plethora of risk. In case of member wishes to leave the club, will be requested to pay before leaving a sum that's called as a release call. So what in advance call and release call? See that Willis has mentioned that the intent of release calls is to remove any potential future liability for further calls to the club following termination of membership in the particular club. By paying the release call, the member is released from the obligation to pay future supplementary calls to the club. Thus, the release call is intended to present the members' proportion of the clubs incurred but not reported. Right? IBNR claims for the open years outstanding. So, this about the wills and everything about the release call, advance call. At least we should know that. What do you mean by advance call and release call? The international group of P+I clubs, the history behind IGA, also the history of pooling agreement, which has an origin back in 1899. The so-called London group of P&I clubs, which that time consists of 6 clubs, entered the first claim sharing agreement. The principal purpose of the pooling agreement was the same. Well, today, it constitutes as the legal framework for the claims sharing among the group clubs. Only later in 1951 did it become also the vehicle for the collective purchase of market reinsurance cover. Okay. Today, the reinsurance contract of the international group is the biggest reinsurance contract in the world, and it offers the necessary confidence to everyone involved directly or otherwise in the international seaborne trade. So, how it happens in internationally. Club business is separated in policy years, within which club income should cover all the liabilities of the club members. In cases where club's income falls short of obligations within a policy year, something that comes 2 to 3 years later when claim settlement is completed, members are asked to pay a supplementary call or back call, that is an additional amount to balance the club's books that policy year. In the opposite case, the surplus can be saved to address future claims or to balance deficit in the previous policy years. Clubs are managed by professional managers overseen by board of directors chosen usually from their members. Managers deal with almost everything as long as it falls in the club rules. Right? Matters falling outside the club rules and other high financial impact issues end up in the agenda of the clubs. So, how club business clubs plays an important role here, right? Yeah. Claim sharing lie at the heart of P plus I system. Claims are dealt with in three tranches. The first tranche, as of 2016 policy year, it is retained by the club to which the claiming vessel is a member for claims up to $10 million, including a reinsurance premium to cover between $3 to $10 millions. Claim which exceed above the limit is the second tranche and are deal with all the international group members, clubs together up to a limit of $80 million. The second tranche is divided into two pools, lower pool, right, and upper pool, 10 to $45 million, 40 to 80 million. See this? Finally, very big claims exceeding the second tranche upper pool limit are covered by third tranche reinsurance under the excess of loss program and subsidiary reinsurance facility under the name Hydra. So, it's one of the thing, reinsurance and Hydra importance in claims. So, these are the P&I. See this? These are the layers actually. Hydra, I told about this Hydra and everything. P&I and oil pollution, where it occurs here, marine pollution. So these are some of the diagrammatic. So individual members premium calculation and reinsurance cost. Okay. So these are the some formula and calculations happened in the year. Yeah. The P plus I number of claims has been showing a steady decline. The evidence is the long-term benefits of IMO initiatives in all fronts, as well as the overall quality increase in services rendered by World Fleet. Individual club retention has steadily risen over the period of USD 10 million from about 6 million in 2006. The reduced number of claims also had a positive impact on reinsurance and allowed for favorable renewal terms, plus an extension of cover as 20th of February to include nuclear risk liabilities arising out of approved certificates, guarantees, or undertakings, right? So these are the things how steady decline happens. Typical factors considered by clubs for assessing a member's risk: ship, type of vessel, type of operations, reefer, drilling, towage, age of vessel, missionary employee class, flag, national or flag of convenience, FOC, trading, crew, nationality and qualifications. These are the typical factors members risk. Operator, experience in trade operations, nationality of the assured, owners, manage, charters, loss record, adverse claim record, previous insurers, size of fleet, extent of cover required. Right? So see this, members risk, ship operator. So all the things taken into account. See that in a nutshell, P plus I club does many things to make the life of the owners, managers, and crew safer and easier. The club managed claims. It acts as central point of contact, and it appoints experts, lawyers, and correspondents to its worldwide network. It provides 24-hour emergency response. It pays claims and fees incurred. It advises on safety and loss prevention. Issues circulars to members aimed at reducing incidents that may result in a claim. It also provides operational security, deals with arrest or threat of arrest of an entered ship, issue club letters of undertaking and pollution cover cards, arrange for bank guarantees, useful in million ways to the assured. So, in a nutshell, what is the function and how it acts? What is the benefit of P plus I clubs? Okay. See this time frame of P plus I claim. It involves principal 4 stages. Phase 1, notification about the incident, initial handling, that is 5 hours. Parties to be notified include authorities, agents, insurers, right? P&I, H&M, loss of hire, charters, cargo interest. The aim is to direct, coordinate initial response, including the handling of media, critical passenger ship accidents, and marine pollution incidents. So this is about the phase 1. Time frame of a P+I claim is a very important phases or stages. Phase 2, management of the incident, about 1 week. So, okay, see this, 5 hours, 1 week, dealing with the ongoing crisis, assistance to master, crew, local office, local authorities, pollution board, response coordination with the port authorities, government organizations, central point of contact, arrange mobilization of resources, teamwork, claimant security, media, press and handling, minimization of risk, gathering and preserving the evidence, investigating the source and cause of incident, recording time sequence of events, taking true statements, all the things, video of incident, photographs of accident site, reading any relevant equipment or evidence, monitoring the surveys from third parties, and restricting the access wherever necessary. So this is about the phase 2, management of the incident. Phase 3, legal and technical assessments, about 3 months, liability analysis, jurisdiction, applicable law, estimation of the extent of damage, joint strategy together with the member. See that? Phase 4, final settlement, about 3 years, including but not limited to legal proceedings, settlement negotiations, and final resolution of the all outstanding claims. So these are the stages, very important stages, time frame of a claim actually, protection indemnity claim. It involves in 4 different stages. We've shown that also, we've seen that also, right? So this is about the thing, Unit 5. Unit 5 is only the how it happens, how the clubs functions, and what are the important functions, phases will occur, right? So with this, we are finishing the subject. Unit 5 is also over, right? So any doubts? All are clear with this? Yeah. So everyone is clear with this subject? The subject get over actually. 5 units are covered, right?
Yes, sir. Okay.
Yeah.
We are clear, sir.
Yeah. I think it's useful for you. So overall brush up of the warm up of the subject and everything. So at least you can able to know the concepts, important things are involved there, and right. Shall we stop here? So whether it's useful for you, everyone?
Yes, sir. Yes, sir.
Yeah,
Absolutely.
useful for you.
Yes, sir.
Right. So please follow this notes also. Right. Maybe I think you have the notes and everything. So please follow this whatever I've shared and the PPT and everything. So it's very useful in the examination point of view. So do well. So shall we stop here? Right. Thanks a lot. Take care. Bye. Be safe and take care of life, and please be very safe with the corona. Take care of your parents. Take care of the family members. Right. So always be safe. Right. Thank you. Thanks a lot. We'll meet you soon as soon. Right?
Thank you, sir.
Thanks. Thank you.
Thank
Same
you.
to you, sir.
Thank you.
Thank you, sir.
Thank you. Thank you.
தெரியுமா மீன்